Hello and welcome back to Kitco Mining's Digging Deep with me, Paul Harris, in which we take a closer look at some of the most interesting news items in the mining and exploration space. Joining me today is geologist and man of leisure, Jeff Pontius. Jeff, welcome back to Kitco.
Thanks, Paul. That's great. Yeah, I'm enjoying the life of leisure here.
Oh, well earned, well deserved. Someone else who perhaps would have a well-deserved rest is Robert Friedland. This week, South Africa's President Cyril Ramaphosa opened Ivanhoe Mine's Plat Reef platinum, palladium, nickel, rhodium, gold and copper mine in South Africa, together with Robert Friedland and company CEO Mana Colette. Congratulations there to Ivanhoe. But for our conversation, Jeff, let's start in your old stomping ground of Nevada, where rumors are circulating of the possibility of Barrick Mining being split into two upon news with Elliott management buying a big stake in the company, supposedly aiming to push for a split. I first heard rumors of a potential split of Barrick in August. The rumors were that the company would be split into good Barrick and bad Barrick, or perhaps a kinder way would be to say low country risk Barrick and high country risk Barrick. The good Barrick would be centered on the Americas with Nevada gold mines and Barrick's 4 Mile deposit as the centerpiece, the jewel there, and possibly also with the Pueblo Viejo mine in Dominican Republic in there too. Jeff, I imagine you still keep close contacts with a number of people in Nevada. What are people on the ground in Nevada making of these rumors?
Well, I think as you say, the rumors have been around for a while, and with Mark Bristow's departure, the timing for doing something like this is probably good. So, you look at it, Barrick is really three companies. It's as you say, the higher risk Africa-based production. There is the copper production, and then there's the North American with Pueblo Viejo together. The North American assets with Pueblo Viejo, you're talking about 40 million ounces of potential reserve and resource there. Good production profile. It looks good. And, it sort of reminds me of the thing that we always think of when we have assets. We're either going to grow assets, we're going to run them for cash, or we're going to sell them. So I think Barrick is probably getting to the point where they're looking at that kind of thing, and they may very well do that, because I think the North American assets, particularly with PV, it is probably pretty attractive investment for people.
Now, running a company across multiple jurisdictions is obviously always a challenge, and with Barrick operating in so many different regions of the world, even more so. So I imagine perhaps there's an element to this. Barrick obviously has to find a new CEO. I imagine there's not too many people out there that would want to undertake the travel schedule that Mark Bristow did. Mark was quite an anomaly in that respect. He was visiting the operations, 2 or 3 times a year, circling the globe endlessly. Not many people have an appetite for that kind of travel. So perhaps splitting the company would mean it could be more successful in terms of recruiting a new CEO, or in this instance, new CEOs.
Yeah, I think you're right. The one of the things you certainly look at is running a big multinational company is undoubtedly a huge burden to bear. And as you say, Bristow was a real warrior when it came to actually getting out and visiting all the sites. So I think it would be very hard to replace Mark from that standpoint. And from an investor standpoint, it may be a simpler story if you looked at these assets in 2 or 3 different buckets, so to speak.
I think I agree with you there, Jeff, because investors tend to either like gold or like copper, or they like them in separate vehicles. They like Americas in one vehicle, elsewhere in the world in another vehicle. So again, that would seem to be, good reasons to potentially split up Barrick to make it more digestible and make the investment cases simpler for people who are interested in particular combinations of things.
Yeah, I agree. It probably makes sense. And certainly if you have a big driver like Elliott that has a plan, that they want to see implemented, they're in a space where they probably have the ability to really make that happen, maybe for the company. I don't know.
Okay. Now, another potential catalyst to this was the PEA that Barrick put out on 4 Mile, basically 2 weeks before Mark's departure. That showed itself to be a very high-grade, multi-generational asset potential there. And so with that potentially as the jewel in the crown, that perhaps adds fuel to the fire to separate Barrick into constituent parts. Jeff, as a geologist who's worked a lot in Nevada, it must be wonderful to see that there's not just 4 Mile, but there's 2 great exploration discoveries in Nevada in recent times, looking like there will be the next multi-generational mining assets in the gold space. In addition to 4 Mile, I'm also obviously talking about AngloGold Ashanti's Arthur deposit or conglomeration, which is close to where you were operating and exploring with Corvus Gold. So I guess one question there, Jeff. Nevada's obviously been well explored for many, many years, decades. Why have these major discoveries, relatively speaking, suddenly happened? What was the key to unlocking each of these?
Well, I think when you look at it, particularly from the experience there in Beatty with the Arthur project, as it's called now, it is diligent exploration over time that is continuing to deliver exploration opportunity. And so I think that realistically, when you look at that, 4 Mile was a long-term project, just like Beatty was, basically 10 years in the making for the discovery out there in Beatty. And similar at 4 Mile, even more, I think. So when you put all that together, as long as you have a group that is well-funded and has a philosophy of, we're going to unlock whatever we think is here, and I think you're going to have an opportunity for success. But these things, as you say, are quite rare. You're talking about mines that are going to last for 20, 30, 40 years, going to provide incredible amount of cash flow for the companies. And so those kind of things are not around the corner on every district or project that you look in. So I think that when you go after these things, you have to be diligent at that and really produce the right geologic model and be able to take it forward. So that's what they did at 4 Mile. We did that with Corvus in the Beatty area when we originally made a small discovery at North Bullfrog, and then we moved on to Motherlode, and then eventually the area where Merlin was discovered, which turns out to be the largest part of Anglo's new Arthur project, I guess.
I think one of the observations of this is, in some ways, the success at 4 Mile really validates what was Mark Bristow's opinion, that value is created through the drill bit by exploration, not by paying premiums to acquire other companies. It's perhaps unfortunate for some that he's not going to be there to quarterback that into its next stage of its life and development. Now, we've got a good link into our next item here, because we've talked about AngloGold's Arthur deposit or conglomerate of deposits in Nevada. Recent months have seen big money paid for royalties on the Arthur project, and there was more excitement in the royalty space this week when stablecoin cryptocurrency company Tether Investments took a 12.7% stake in Versamet Royalties, as did the Lundin Family Trust, who between them paid almost $207 million Canadian to buy out the position which Royal Gold held in Versamet, which it obtained through its $3.5 billion October acquisition of Sandstorm Gold. The Tether buy adds to its 33.7% stake that it has in Elemental Altus Royalties, which is now known as Elemental Royalties, and at least a 10% stake in Gold Royalty. Jeff, Tether is diversifying its exposure in the royalty space, which presumably is healthy for Tether, but is it healthy for the space to have a massive financial entity buying into several different companies. It's perhaps like having Middle Eastern and Russian oligarchs buying into Premier League soccer clubs, English Premier League soccer clubs. What's your view on Tether's move into the royalty space?
Well, I don't know much about that analogy there, but it's a move. And I have had an opportunity in the past, right after the acquisition, to talk to Dave Cole a little bit about the EMX acquisition and Tether's role in the overall new elemental royalties. And certainly you're looking at these stablecoin groups like Tether, like Circle, like some of these that are really monetizing themselves to the US dollar, looking, I think, for risk protection. And gold is that sort of risk protection for the dollar. And as the US economy continues to be a little unsettled and the dollar continues to be volatile, I think there's going to be continued interest from these groups to try and lower the risk with offsetting with some stability that you see in gold. The thing we need to remember, though, is, as you say, these groups are big and they represent lots of money. I mean, the U.S. Treasury holdings for Tether and Circle combined is about half of what the overall gold market, gold produced a year value is. So these companies could have a very substantial impact on the gold market. And if they come in a big way, you're going to see possibly, a lot more of gold control going into these stable coin type situations.
I imagine one question that many people have, what you say makes a lot of sense. So the question is naturally, why are companies like Tether and Circle, why are they investing in the royalty companies and not directly in the miners which produce the metal? Why aren't they investing in Newmont? Why aren't they investing in Barrick and Agnico and Kinross?
I think they get more leverage out of being able to actually invest in these equity positions that are essentially backed by gold. That's why royalty companies, I think, are their favored investments. They also do own physical gold in these funds. So I think they're looking at being able to get enough to actually be a real risk reduction item for them when it comes to the fact that these stable coins are linked to the U.S. currency. And there is some volatility nowadays in the U.S. currency with the volatility in the overall economy.
Okay, fair enough. Well, let's stick with gold and head down to the Maricunga district in Chile, where Hochschild Mining, subsidiary Tiernan Gold, and capital pool company Railton Capital closed a brokered best efforts private placement of $58.4 million Canadian as part of a reverse takeover transaction. The proceeds there will be used to advance the Volcan open pit heap leach project that hosts 11 million ounces of gold in all categories. Volcan is in the same district where Rio 2 is advancing the construction of its Phoenix gold mine, and where Kinross Gold operates the La Coipa mine, and where Mineros recently consolidated full ownership of the Las Pepas project by buying the 80% stake held by Pan American Silver for $40 million. Jeff, the Maricunga district seems to be getting a second life with all of these companies being very active there. What do you think is driving this? Is it the fact that the higher gold price environment reinvigorates the project economics there?
Yeah, I absolutely think that. I mean, historically, this area has been known as a lower grade area of gold mineralization. There's lots of projects down there that have been developed over the years and just have had a difficult time going forward or even making money, the ones that actually are in production. So I think when we look at it, things change dramatically when you look at gold price above $3,000 an ounce. You can look at some of the latest reports from operations, even in Nevada, where they're mining 0.2 grams per ton and still making decent money. So when you look at those kind of economics and apply them to these very large gold deposits, but relatively low grade, all of a sudden these things get to be very impressive cash producers. And I think you're going to see more and more effort going into areas that have seen some low-grade gold mineralization in the past and trying to unlock that with the new gold price. So yes, I think gold price is the real driver here.
I think another transaction in that line or that train of thought is SSR Mining, which bought the Cripple Creek and Victor operations from Newmont earlier this year. It looks like that could potentially be a second Marigold for them. Marigold in Nevada, very, very low grade, but it's been a cash cow for SSR. And Cripple Creek and Victor looks like it will be the same at these elevated gold prices. Jeff, another thing that this RTO perhaps indicates for Volcan is that the market does seem to be getting increasingly hungry for news stories that are ready to go and easy to digest, easy to get behind, easy to understand. Obviously, 11 million ounces is a great start for Tiernan to come out of the gate with its RTO. A lot of value already there. What's your view of this transaction and how the market is accepting or demanding, if you like, news stories to invest in?
Well, I think the market is warming up to a greater position in gold, and they are looking not only at majors and producers now, they're starting to go down market and start to look at some of these developers and even some juniors. So I think this is a very good sign for the market. This is certainly, these guys have been able to put together enough financing to make these things go forward, and they've done it fairly quickly. It's impressive, and I think what you're going to see in the future is more and more of this, and the hunger for these opportunities in the gold sector. And gold is not only being pushed now by just direct investor interest and so forth. As we just talked about, we're seeing the stablecoin guys look to lower their risk level with getting more exposure to gold. I think it's setting things up for a nice little bull run in the gold market.
Absolutely. Well, as part of that, we've seen a lot of very big raises from the junior developers and the junior explorers. Another one was announced this week with Vizsla Silver looking to raise $250 million in convertible senior unsecured notes due 2031 to advance its Panuco silver project in Sinaloa, Mexico. That sounds simple enough, but it isn't. The initial purchasers will have the option to buy another $50 million worth of notes, with Vizsla to take out capped call transactions if they do so to cover the shares that will initially underlie the notes and compensate for potential economic dilution upon conversion. Quite a headache there. Jeff, is Vizsla having a cake and eat it moment? It wants the money, but it wants to put some strings in place to manage dilution?
Yeah, for sure. I mean, this is one of those cases. Hey, if you can get it, go for it. You know, it's quite a lucrative deal. I think it's an impressive area. It's a big district. It's got some great vein deposits in it. A person I know is advising on that, Peter McGaw, and Peter's got some great history with vein deposits in Mexico, in particular with the Juanicipio project and discovery there. So, I mean, it's a good project to invest in. They certainly are being able to get their cake and eat it too. And so I would say, with these kind of things, as we see them go on and greater interest, particularly in the broader U.S. market down here in the States, it's setting itself up for a pretty interesting gold, precious metal move in the future, I think.
Okay. One other sort of thought about this Vizsla issue is that when things get complex, financial institutions tend to take their pound of flesh. So will this, the complexity in terms of these, cap call transactions, etc., will this negatively impact the potential pricing that Vizsla will be able to obtain for these notes?
I don't think so in the short term. And it's really there's a couple key elements that they have to bring forward with particularly this financing. The test mining underground is going to be important for them. Those results come out good and fit the plan. I think the appetite is such that people are going to want to ride with their exposure in precious metals for a while. And the short long kind of trade that typically happens in some of these deals might not come to impact them. Not for a while anyway. It depends on the results that come out, but certainly I think that there's some long interest in the precious metal sector, and that long interest is coming down here in the States as well.
Well, let's talk a little bit more about that precious metals interest in the United States. Previously, already in this call, we've talked about Tether Investments, a US-based company. We've talked about Elliott Management, a US-based company. Another one getting into the space is Muddy Waters Capital. Carson Block made bullish comments this week on Snowline Gold. The point of note here is that this is a US fund talking up a non-producing junior mining stock. Jeff, what can and should we read into this?
Well, I think this is a very positive. Muddy Waters made a long call on Snowline, and that's not their typical business. They're usually short sellers, and those guys usually take advantage of moves in the market. But they're looking at this investment now as a long position, and they're talking about 2 to 3 years out. They're also talking about a project in the Yukon, which is, most people down here in the States see that as the frozen north up there. And so I think you're starting to see these investment groups, particularly industrial investment groups, are really starting to take a hard look at mining investments, particularly in the precious metal sector, and how those things could grow in the future. And that's a very good sign. We saw that back at the end of 2008, early 2009, here in the States with the last boom we had. We had a lot of investment interest, particularly initially it started with these San Francisco funds, and then it moved on to New York. And so I think when we look at that those are all good signs. Those are things I look for in the sector that tells me that we've got a longer run going forward here than maybe just 6 months or 12 months or something like that.
Okay, and another indicator that this is sort of starting to happen or is becoming a thing is that a number of TSX and TSXV listed companies are pursuing big board US listings such as NYSE American and of course the NYSE main board as well. They want to get better exposure to US investors. They want to make it easier for US investors to invest in their companies. Jeff, what's your view on the Canadian companies, the Canadian listed companies seeking these bigger board listings in the US? Do you think that makes a lot of sense for them to embrace and take on the higher costs of these listings in order to appeal and make it easier for US investors, particularly retail investors, high net worth investors, to invest in those companies?
Yes, I absolutely believe that. I had a couple different companies that had US listings that were originally TSX listed, and those US listings were a true catalyst, particularly during the time of increased interest in precious metals. Those U.S. listings were the driving force behind trades and the movement of the stock and really being able to raise money in larger blocks of cash. So I think that's critical for companies, particularly when they have critical mass. They have the right mix of investments that will interest U.S. investors. So I think that you'll see that as a continuing thing going forward. The market in the U.S. is very large, huge compared to the Canadian market. And if precious metals takes off and continues on into what we believe is going to be another significant bull market, those U.S. investments will be critical to companies for developing their assets and for eventually being able to transact them in the future, I think. And U.S. investors really need that U.S. listing. Otherwise, it becomes very difficult to make trades across border. You get dinged back and forth on those. They're not easy to go forward with unless you have that senior board listing.
Okay, fair enough. Now, Jeff, we are coming to the last few weeks of 2025. Looking back on the year, what for you have been one or two of the main news stories, the news items of this year for the mining space?
Well, for me, it's the movement of gold and silver price and the resulting doubling and tripling of some of these junior share prices. The juniors that have significant assets that are good, credible assets have really benefited great over the last 6 months. And so this year has seen, gold price basically double, and we're now looking at juniors and mid-tier juniors and developers being able to see significant increase in their ability to not only raise money, but to maintain their share price and move it forward. So this has really been a turning point, in my opinion, for the market. It's been in a doldrum for a long time since the last boom, and now we're seeing it come out of it in a really significant way. So historically, when I look back at 2025, I see this as the inflection point for the next bull market. And in 2026, I think we're looking at a nice, solid bull market. We're getting a nice base built in here now in the gold sector and the silver sector. I think we're going to be able to see another significant leg up, maybe in the second half of 2026. And so I'm very optimistic about the ability for the gold market to maintain this bull run, and for juniors and even mid-tiers to continue their movement up. And hopefully in the future, they're going to be able to make some significant acquisitions where they'll be able to, some of these newer discoveries that are coming online are going to be able to be pushed forward at a much faster pace.
Okay, thank you. Well, you covered your hopes for 2026. Any potential fears for 2026?
Well, we've had a erratic economy here in the U.S. this year, and it's and I think the uncertainty factor could potentially get worse in 2026. If it doesn't, then we're in for a good run. I think if we have some significant uncertainty in 2026 from the economic standpoint, and the economy slips back into a stagnation sort of situation, it could be a negative on top of what should be building up as a good precious metal market. So I just hope that the economy mellows out here in the U.S. and that the international trade situation mellows out, and that we're able to get back to being normal again.
Okay, well, let's hope so. That's it for this week. Happy Thanksgiving next week for our US listeners. And of course, to you, Jeff. Thank you very much for joining me again.
Great. Thanks, Paul. It's been fun.
And of course, to our viewers, don't forget to hit that subscribe button. I'm Paul Harris, and this is Kitco Mining.